pleasure having you today. The floor is yours.
So I have the honor to do the presentation after the lunch break. I hope you had a light lunch. So because we are going to talk about mostly quantitative impacts, quantitative stuff. My name is André Dragosch. I'm head of research at ETC Group. We're the biggest European Bitcoin ETP provider. And I'd like to talk about the outlook for crypto assets in 2024, especially Bitcoin. So we had the Bitcoin ETF approval, right? So we can do a check. It was probably the most anticipated event in Bitcoin's history. On the 11th of January, the SEC, Securities and Exchange Commission in the US, approved a spot Bitcoin ETF. We had Bitcoin ETFs before, but they were derivatives-based, futures-based, but they approved the spot Bitcoin ETFs. And this set off like a tsunami of capital flowing into Bitcoin. It was the most successful ETF launch ever by any metric. I think iShares, they were the first ETF to reach 10 billion in AUM within that very short time period. It was most successful ever, way more successful than the gold launch in 2004. So we did do a check. But of course, we see other kind of catalysts this year. For instance, after the Bitcoin ETF, we have the halving. So what's the halving? But we'll talk about this, yeah. And last but not least, potential US recession. I mean, it's not a consensus call. I think it's rather off consensus call this year. And potential Fed pivot. But I think the big question for investors is it even priced in? Are Bitcoin ETFs priced in? Is the halving priced in? Is the potential US recession priced in? But of course, we'll focus on Bitcoin and crypto assets here in this case. And geopolitical risk as a wild card. So are Bitcoin ETFs priced in? Are they already reflected in the price? Because if you have followed the market, in the run-up to the approval on the 10th of January, you saw a rally in the price of Bitcoin, anticipating the approval. And there were many traders said like, the moment we have the approval, you need to sell the news. Buy the rumor, sell the fact, sell the news, right? So the price indeed rallied, it reached 49,000. And then there was a short collapse because people actually sold the news. And people thought, okay, that's it, it's priced in. But is it really priced in? That's the big question. And we think, and this spoiler, we don't think it's fully priced in, despite the approval and despite these flows that we've seen already. So I promised we talk about quant, right? On the left-hand side, you see the sensitivity of Bitcoin's performance, weekly performance, and the associated global Bitcoin ETP fund flows per week in terms of AUM. So historically speaking, we can say around 1% increase in global Bitcoin ETP AUMs was associated with around 1% performance. So that's like the full sample, right? But it fluctuates. It can fluctuate over time. It varies heavily over time. Sometimes that sensitivity is around 20. In bull markets, that multiplier, right, can reach 20, meaning 1% of inflows in terms of AUM is associated with 20% performance per week. So it can fluctuate very widely. And in the lower panel, you see it's not only a story, it's not only a narrative, because you can see it in the data. The ETF flows, they have an increasing effect statistically. They explain more of the variation in the performance, right? So it was not only the story, we see that impact on price. There is more to this, right? But coming back to the question, is it priced in, right? And you can do this kind of thought experiment. So we looked at the US ETF market in general. So we have around 8.1 trillion US dollars that sits in passive ETFs in the US. 8.1 trillion. This is just US alone, right? Passive products. 6.5 trillion are in risky asset ETFs, equities, commodities. So let's assume 20% of those investors decide to allocate 3%. So every fifth investor says like, I might substitute 3% of my portfolio into Bitcoin ETFs. And you get this ridiculous number, 38.7 billion USD, which is a conservative estimate, because the retail adoption rate in the US is already between 20 and 25%. There are some surveys that say like 25%. Every fourth American already has exposure to Bitcoin. So it's quite a conservative estimate. And 3%, we took 3% because most of the studies, they imply you get the highest risk-adjusted return Sharpe ratio, around 3% allocation. So 38.7 billion that can potentially be substituted, right, from these passive risky asset ETFs into Bitcoin ETFs. We've seen around 7 billion already, which is quite a lot, net inflows, right? We're still left with slightly above 30 billion. So is it priced in? So if around 30 billion are still to enter the market, it's not yet fully reflected, because this represents still around 50% of global Bitcoin ETP AUMs at the moment, despite the price rise. So we still expect that around 50% of performance is still ahead of us. And this is a conservative estimate because the sensitivity, it varies over time, right? If you assume this one-to-one relationship that I've shown you before, over the full sample, it makes sense, but it can be even wider. So it's more like a conservative estimate. So the answer to, is it priced in? Not fully. So we expect like 50% performance down the road. Second big catalyst and major driver for Bitcoin. Bitcoin halving. But what's the Bitcoin halving anyway? So as the name suggests, the supply growth of Bitcoin, and this is like dictated by the algorithm itself, supply growth of Bitcoin halves, drops by 50% every 4 years, which is around 210,000 blocks. And the last time we had such a halving was in 2012, 2016, and 2020, shortly after the COVID recession. And we'll have another one in April this year. So that will be the fourth halving. And the supply of Bitcoins that is being produced on a daily basis will drop from 900 Bitcoins to 450. It halves. It drops by 50%. It's like a supply shock. But I probably get this asked the most. How come that an event that is public information, everybody knows this. Everybody knows that this will happen on the 20th of April. They even pinpoint the date. They say like, how come that it's not being priced in? How come it's not reflected? I mean, I know that's going to happen. I buy Bitcoin now. I front run this event, right? How come it's not priced in? And so there's a quantitative answer, of course, and a mechanical answer. The quantitative answer is here. But let's look at the track record first. The track record, so this is like the mean, median performance, minima, maxima of Bitcoin's performance around these halving events. 500 days before and 500 days after the halving events. This averaged across all three halving events, so 2012, 16, 2020. And what you see is, you see some kind of anticipation. So the market expects, okay, halving is coming up, we drive the price up, but the majority of the effect is coming after this event. at least historically. That's the historical track record. And it's quite a ridiculous number. So on average, we had 17x. 17x after 500 days. That means 1,800% after 500 days. But still, how come it's not being priced in? So we asked this question ourselves and said like, okay, if it's not significant, then there shouldn't be a significant performance difference between 20 days after the halving and 20 days before the halving, right? 50 days after the halving, 50 days before the halving, and so on. And this is the calculation. It's like X days after the halving, X days minus before the halving. And what you see, it's a non-event at first. There's no huge performance difference between, like, for instance, 50 days before after the halving and before the halving. But then it gets like vastly significant around 100 days after the halving. That halving effect is like cumulative over time. First, it's like 450 Bitcoin supply deficit. The second day, cumulatively, will be 900 Bitcoin supply deficit. Third day, 1,350, and so on, right? It accumulates over time. It builds up over time. And these are T values in the lower panel. So it becomes significant around 100 days after the halving, on average. But then it becomes like vastly significant. Starts, I think the peak effect is reached around 400 days after the halving. In our case, in April is the halving. The peak effect is around spring, summer next year. And yeah, it's highly significant. So it cannot be random. Because if it was random, there shouldn't be such a huge performance difference, right? So our take is it's not priced in. And we did also like a forecast on potential target price for Bitcoin. And this actually incorporates both the halving effect and the fact that this effect is also diminishing over time, because the supply deficit in relation to the current supply is not so much like in the earlier halving years. The percentage is not so high. But nonetheless, so it's more like a conservative estimate. Nonetheless, we estimate end of the year, Bitcoin is likely to reach $103,000. And this, like, yeah, as I said, more like a conservative estimate. So new all-time highs above 100,000 by the end of this year. But this is going to accumulate around the year 2026, where we expect 185. And by the end of this halving period, which is around 2028, we expect $215,000 based on this model. So that's more like the tricky question, right? Is the US recession priced in? Probably every TradFi guy has the same question in mind, right? But it's also relevant for Bitcoin because Bitcoin is also a macro asset. We found out that 80% of variation in the price of Bitcoin is actually explained by macro factors. Global growth, monetary policy, US dollar, Eurozone risk, right? BTP Bund spread. Is the US recession priced in? And of course, there's always a quantitative answer, right? What does the bond market say, right? The bond market, based on the term structure of interest rates, you can build this kind of model. It says like the 2-10 spreads, term spreads on the yield curve of the US, you can imply some recession probabilities as well. And it indicated around 90% recession probability last year in summer, but this is like forward-looking over the next 12 months. So based on this model, it says like it's very likely that we have a recession in June this year. So we assume this as our base case. Okay, recession is probably going to happen because you have long leads from monetary policy tightening to unemployment rates spiking and so on. But how is it relevant to Bitcoin? So the market expects already cuts, right? Price in cuts, Fed funds futures, price in cuts. The way it is relevant for Bitcoin is through inflation expectations, because what you see during monetary policy announcements in the past, Q1, Q2 by the Fed, or even COVID stimulus, the moment you have the announcement is already enough for inflation expectations to skyrocket. They haven't bought any single bond. They just do the announcement and inflation expectations take off. And how is it relevant for Bitcoin? I talked about these macro factors. Here they are. So this is the percentage of variation explained for every single year for the performance of Bitcoin. How is it explained by macro factors? Global growth, monetary policy, US dollar, Eurozone risk. And there's some residual that's coin specific. You cannot explain with macro, right? Halving is such a thing. You cannot explain the halving with macro. This year, most of the variation could be explained with US dollar. So the way it is relevant, the Fed easing is relevant for Bitcoin is the moment you have an easing announcement, you'll have loosening financial conditions, weak dollar, and that's a tailwind for Bitcoin right now. If you have a loosening dollar, Bitcoin's somewhat the anti-dollar. It's like gold in a way, right? It rallies when the dollar tanks. But if you look at the historical track record for recessions, we only have one observation. That's a problem because Bitcoin is still so young. We only had one single recession, COVID recession. What happened during COVID? You had a 52% drawdown in Bitcoin. I mean, you had a 34% drawdown in S&P 500. So it's okay, still okay. But the performance at the end of the year was still 300%. So you had a huge interim drawdown, but then it's sharp reversal because of monetary stimuli, fiscal stimuli, and so on. And that's somewhat the play we have in mind. So in case we have the recession, we might have some interim drawdown, but because of the halving, especially because of the halving, ongoing ETF flows, you'll probably have a very sharp rebound, especially if you have a Fed policy reversal. So what's next? This is more like the short-termish, medium-term outlook. But what about the long-term outlook? In 2024, it's in the first time in history, Bitcoin will become more scarce than gold. Think about this. Will become more scarce in terms of the stock-to-flow ratio. It's a concept from the commodity space. It calculates the current supply and divides it by the annual production. So it takes for gold around 60 years with current production to replicate the supply. For Bitcoin, it also takes around 50 to 60 years, but that number is going to increase to 124 years. So it means it takes 124 years to replicate the current supply of Bitcoins in circulation. But this won't even happen because you have a hard cap, which is also a part of the algorithm. Hard cap says 21 million coins max. So this won't even happen. But this, from a production growth supplies perspective, it will become even more scarce. That's the first time in history, and this will happen in April this year. And with every halving, this is going to double. And by the end of this decade, it will take 507 years, so half a millennium, to replicate the supply of Bitcoin. And what we're seeing is, in terms of macro, the whole macro narrative, the sensitivity, this is like CPI swaps, market-based inflation expectations, versus the Bitcoin price in logs. And what we've seen is the scatter plots are colored according to the halving period. With every halving period, new halving period, we saw an increasing sensitivity to these market-based inflation expectations because scarcity has been increasing. We came from a very risky asset in the earlier years to more like a safe haven. It's become more gold-like. Volatility has decreased structurally. came from 200% per annum to now 50%. More adoption, more scarcity, right? So that, and we expect that this sensitivity and this important market-based inflation expectations is going to increase. Maybe investors already, they have this narrative in mind. They think like, oh, Bitcoin is going to become scarcer than gold. It's a digital gold, right? We had, on a global basis, we had around 8 billion net inflows into global Bitcoin ETPs, including US, Europe, Asia, and so on. Meanwhile, we had around 4 billion outflows, net outflows from gold ETPs. And this is since 11th of January, past 1.5 months. Question, yeah? Is Bitcoin the better gold? And we think it is. But what's the end game like on a very long-term time horizon? The end game is because Bitcoin becomes scarcer with every halving. It's double as scarce as gold this year, but this scarcity will increase over time. It will take away all the monetary premia. And by monetary premia, I mean you have a volatility value, right? If you use real estate, you can live in real estate. It provides shelter, right? You have utility from real estate. But also, because it's been used as investment, you have that monetary premium, which is not due to shelter demand, utility demand. And our expectation is Bitcoin will slowly cannibalize on these monetary premia in hard assets like real estate, gold. What does it mean for the price of Bitcoin? Let's say Bitcoin disrupted gold will become the prime reserve, as will become the prime store value, implies 600,000 per one single Bitcoin, hypothetically. So if Bitcoin reaches the market cap of gold, it's 600,000. If it reaches the market cap of US Treasuries, which is around 26 trillion, I know, don't think it's likely, but it can become like a store of value reserve asset as well. Treasuries are a store of value reserve asset, right? So if Bitcoin reached $26 trillion, it would imply $1.2 million per one single Bitcoin. You think, maybe you think like, oh, maybe I'm wrong, right? Maybe this is like too much. But if I'm wrong, these guys are also wrong. Alliance Bernstein, Bitcoin, safe haven asset, more attractive than gold. And I think this kind of demonetization of Bitcoin from hard assets, traditional hard assets like gold, real estate, and probably even US Treasuries, is not priced in. Thank you.
Well, André, thank you so much. It was a fascinating presentation. I haven't received any question but you can still potete sempre usare il numero per le vostre domande. Just let me ask you a couple of questions, because I've got an interesting number for you, which is related to the approach of these guys into the room on digital asset. Because, you know, here they made a survey, and 42% of the advisors and bankers here are interested in investing in digital assets.
Yes.
Last year, the same number was 19%, so less than 50%. I mean, it doubled in a year. But last year, March the 8th, you might not remember, it was the day of Silicon Valley Bank. And the market was in a risk-off mood. Today, it's risk-on.
It's risk-on, yeah,
it's
absolutely.
definitely risk-on.
Yes.
And so my first question is, how do you see the correlation between not just the technical factors that you mentioned, you know, the halving of ETFs and also the flows into ETFs, but also the market sentiment? Because sometimes volatility has been extremely high, and for final and retail investors, this is perceived as a danger.
So what we do at ETC Groups also, we calculate a sentiment index based on 15 different metrics, including on-chain metrics, also TradFi sentiment indicators. And I can only confirm. So sentiment is, of course, relatively high at the moment in crypto assets in general, because we just touched new all-time highs. We consolidate above 60K now, but we recently touched new all-time highs, slightly above 69K. So the market is a bit euphoric. So there is some risk of a pullback, at least in the short term. But in my view, in our view generally, this is more like a buying opportunity ahead of the halving and ahead of more ETF inflows, because they keep on coming. And these inflows are sticky. It's not like usually what you observe in ETP flows is they're very cyclical in the TradFi world, right? S&P 500 ETF flows, very cyclical. But Bitcoin ETF flows, apart from the grayscale outflows we've seen so far, are very sticky. They're buy and hold investment, not so cyclical. Because we haven't seen a single outflow from any vehicle except Galaxy. They had minor outflows. But iShares, for instance, since the trading launch, no single day of outflows.
Absolutely.
So I think we may have a setback because of high sentiment, but that's more like a buying opportunity. ETF flows, halving, and potential US recession and reversal.
Clearly there are signs, and you showed in the last slide that the market is more mature today. And I was impressed when I spoke with Larry Fink in October, when I asked him, you know, you were against the Bitcoin. You thought that it was kind of an evil in the financial markets. And now you're launching your ETF. And he said, for the first time I heard him say, I was wrong. I changed my mind. Now I think it's a value potential for retail investors and so on. Well, at the same time, a question about, you know, the correlation between gold and Bitcoin. Because quite strangely, this week we had historic highs on one hand, historic highs on the other hand.
Yes, exactly.
So what do you make of the correlation between gold and Bitcoin?
So as I've shown previously, the US dollar explains more and more variation in the price of Bitcoin, but it's inversely correlated. So the moment you have depreciation of the dollar, Bitcoin rallies. So if you have loosening financial condition, Bitcoin rallies. The same with gold. Usually if you have like a weak dollar, gold rallies. And that's somewhat my explanation for this.
But the market do not feel kind of the competition between the two safe haven.
Yes, exactly. But that being said, so I've shown this chart with the ETP flows, right? That would mean, okay, you have a strong underperformance of gold. But in my view, and I can't explain this, maybe you can as a commodity expert or so, there's been a large divergence between the price of gold and real yields, for instance, right? And ETP flows. I don't know, it seems to be unaffected.
André, this is fascinating. I could go on discussing this for a long time. We don't have time, but just lastly, don't you think that euphoria might be the main danger for the future of Bitcoin? And I'm mentioning this because when we start hearing, you know, we are a media, we start hearing target prices that in the short term are $100,000, and you mentioned, you know, in the medium long term, and we heard from Katie Woods, ARK Investments, and she said by 2030, the base case for Bitcoin is 600,000 by 2030. But the bull case for Katie Woods is 1.5 million for a Bitcoin in 2030. 1.5 million for a single Bitcoin. What do you make of this? Don't you think that, you know, pushing and raising the expectation of the market now could create also a kind of the delusion if in 6 months there will be an external factor that will put valuation down?
The thing is, it's a philosophical question, right? Because value is subjective, right? Maybe it's 1 million, 1.5, 600,000. But I think in terms of Bitcoin, when you consider marginal cost of production, so if you like, theoretically, the fair price of any commodity or any product converges towards its marginal cost of production in perfect competition, right? What's the fair price of a light bulb? Marginal cost of production, right? And because marginal cost of production for Bitcoin has been going up, it's not just subjective value, say like, okay, this is way overvalued, because it costs so much to produce Bitcoins. They're scarce. The reason why they're scarce is because you need energy to produce them. It's a feature, not a bug of the system, right? It's like a commodity. And therefore, as the production costs increase with more difficulty and so on, I think the fair value of Bitcoin will also increase. And it's not just subjective, it's not just thin air. There's physical energy behind this.
Well, we're bringing the discussion maybe too far away. So thanks again, Andrea.